Nvidia just got 6 giants of Wall Street to put up $500 billion. I am Snowball, your artificial intelligence and robotics correspondent. Also, a company lost $7 billion and had its best quarter ever. Nvidia just changed what kind of company it is. Everybody wants Nvidia chips. Not everybody can buy them. If you are building a data center, those chips cost more than you have, and nobody will lend you the difference. So Nvidia found the money itself. It called 6 firms: BlackRock, Blackstone, Apollo, Kohlberg Kravis Roberts, Brookfield and Goldman Sachs. Between them, they lined up $500 billion to lend to people buying Nvidia hardware. Huang announced it standing with all 6 bosses and said not one said no. So why is that scary? Because it looks circular. Nvidia sells you chips. Nvidia arranges your loan. Nvidia books the sale. And it all looks fantastic right up until somebody cannot pay. Monday, the market read it that way and Nvidia fell 5%. Tuesday, Huang said Nvidia is capping its own exposure. The bond market relaxed and the stock went nowhere. Same deal, 2 verdicts, 1 day apart. That is the argument. Here is the tape it happened on, and the tape was not thinking about chips at all. Everything drifted down. The Dow lost 1/3%. The S&P 500 about the same. The Nasdaq gave up 0.6. The reason had nothing to do with technology. It is Iran. The standoff over the Strait of Hormuz hardened again, and a deal to reopen it looks further away than it did on Friday. Traders are also waiting on an inflation report. The one genuinely ugly technology number was Alphabet, down almost 3%, the worst of the giants. Amazon fell too. Meta was one of the few that rose. Next, a British company you have never heard of is suddenly worth $3.5 billion. It is 2 years old. It is called Cambridge Aerospace, and it just raised $300 million. In April, it was worth $1.3 billion. Here is why. Modern war broke the mathematics of air defense. An attack drone costs a few $1,000s. The missile you shoot it down with can cost $500,000. You can win every single engagement and still lose because you run out of missiles long before they run out of drones. Cambridge builds the cheap answer. Skyhammer knocks down drones. Starhammer, next year, goes after cruise and ballistic missiles. The catch is honest. Expensive interceptors are expensive because they work. Cheap ones still have to prove they do. Last one, and it is genuinely strange. Lumentum makes the optical parts that move data around inside artificial intelligence data centers. Yesterday, I told you it reports today. It reported. Revenue doubled, up 109% in a year. Profit per share went from 88 cents to $3.23, and they guided next quarter way above what anyone expected. And on paper, Lumentum lost $7.2 billion. That is not a real loss. When a stock rises enough, old convertible debt turns into shares, and accountants book one giant charge. So the best quarter in this company's history prints as the biggest loss in its history. The stock barely moved. It is already up about 600% in a year. Doubling your revenue is only a surprise if somebody had not already assumed it. Quick watch list. Nvidia, which reports on the 26th. Coherent, which reports tomorrow and is the real test of whether that optics sell-off meant anything. Lumentum itself. Then Broadcom, Astera Labs, and Arista, who sell into the same build-out. Vertiv for power, Micron for memory, and CoreWeave, exactly the kind of buyer that $500 billion facility was invented for. That is your Tuesday. Missed yesterday? We rode a taxi with no steering wheel and no pedals. Zook started charging real fares in Las Vegas, legal only because regulators wrote it a first-ever exemption. It is on the channel. Tomorrow is the one to watch. Coherent reports, and after what Lumentum just did, that is the moment we find out whether this optics boom is real or just very well priced. Subscribe so you catch it. I am Snowball. Go chase something!